More home sellers are starting to slash their prices and big for million-dollar homes across Metro Atlanta. This is September's edition of the Atlanta Luxury Real Estate Market Update. We're going to cover that and more. Let's dive right into it. Now, we've got a ton to talk about in this month's video, so we're definitely going to talk about price cuts. The massive slashes that I just mentioned, they're right around the corner, a couple of minutes away, so definitely stick around. But I want to start with mortgage rates because I think all eyes have been on mortgage rates, and they've been on mortgage rates for years, but they've been trending down. Take a look at this chart here. So for the last couple of weeks, we've gone from, when you look at the jumbo, almost 7% back at the peak of summer, back on the 18th of July. And we hit a low basically of 6.25. That's a yearly low. And if you take a look over the last couple of years, that's more than just a yearly low for jumbo rates. So that's great, right? So if you're buying $1 million plus house and you're going to finance it, unless you're putting a significant amount down, chances are you're going to need a jumbo loan. Otherwise, if you're putting enough down to get into conforming territory, the conforming rates historically have been less than jumbo rates. As you can see here, the black line, those are the jumbo rates, and the gold line, those are the conforming rates. So conforming is regular conventional loan. So they were lockstep. And then this week, when have you seen on this chart the conforming rate be higher than the jumbo rate? So it's interesting, right? So the whole market has been waiting to see what the Fed would do. And I think the market's absolutely priced in the expectation that the Fed would drop rates, and which they did. The Fed meeting this past Wednesday, they dropped it by 25 basis points, but it surprised a lot of people because look what happened right after. So immediately after the announcement, the last 2 days to finish out the week, we saw rates go, the conforming rate go from 6.17 all the way up to 6.37. And then the jumbo rate kind of stayed the same. So why did rates go up if the Fed cut the Fed fund rate? That's a question that a lot of people have. And essentially, they're not tied together. You know, the Fed fund rate will go up or down, and many months later or weeks later, the mortgage rates will actually react to how that happens, but not directly because of what the Fed does. So when you take a look at this chart here, right, you can see here that mortgage rates have been trending down. And a part of that is because when you take a look at the expected job creation for the month of August, well, it came in a lot lower than what expectations were. The market was expecting 75,000 new jobs, 22,000 were created. Mortgage rates down. So now, this week, we got news that the jobless claim number is a lot less than what was expected. So jobless claims, the higher the jobless claims, the more people are making claims for unemployment and so forth. They don't have a job. So it's not good when that goes up. There are more people who are unemployed. Well, the market it's been at its highest since October of 2021. The last expectation was 260,000 jobless claims, and that came in at 230,000. So it was better than expected. And of course, what happens after that, and this is part of the reason why we saw rates come in after the Fed announced the rate cut. You can see right here that it trended up, and that's in line with when that announcement was for jobless claims. So that's one factor. So ultimately, is it going to start trending back up? I don't think so. I think it's going to adjust over the next couple of months. We're going to continue to see this come back down. I know a lot of the big experts, Goldman Sachs, Mortgage Bankers Association, and then I think also Bank of America, they're all projecting 6.5 to 6.65 to finish out the year. And to start next year, it wouldn't surprise me if rates stay in the low sixes. So I don't think we're headed back up, even though this looks like a trend where that's going to happen. So that's mortgage rates. Let's move on. So next, let's take a look at market share. So this is volume based. So it's no surprise, Buckhead's at the top. 18.8% of all volume was in Buckhead this past month. In town, 11.9, Alpharetta 10. Sometimes these swap. Right now, in town was the second highest. Marietta 7.2, the bulk of that is East Cobb. The rest of it is the square and unincorporated parts of Marietta, like West Cobb, for instance. Milton and Cumming rounded out at 5.5 and 5. So you can see the pie pieces getting smaller and smaller. And most of the market is done in Buckhead, in town, Alpharetta, and Marietta. So no surprises there, but it's interesting to see that breakdown. Now, if you like these slides and you want access to them, because maybe you want to look at the data on your own time a little bit later, I'm putting a link to request them in the description and in that first comment. Always free. Feel free to request them and I will get them to you. Now, every single month, I seem to talk about the median price not moving. I talk about it in the overall Atlanta housing market video that I do, where it's been 425 since September of last year. In the luxury market, it's also been 1.35 million since April. And you can really go back to April of 2022, where it's been 1.35 all the way until April of 2024. And then there was a year period where it went up and down a little bit. And now April of this year through today, it's been 1.35. So the median price hasn't moved. It's been very, very stable. Take a look at the average price. There's been some ebb and flow. This past month, it's down a little bit. So it's down by about $2,000. It's negligible, but that gives you a general idea. But we're going to break this down by locality. So let's look at that. So it's no surprise that Buckhead has the highest median price at 1.68. You'll see when we look at averages here that it's actually quite a bit higher than this. It's up year over year. And in most cities, you're going to see that the median price has risen year over year. In some areas, it's up quite a bit. Now, when you look at this, you might be surprised to see that Alpharetta is actually under the median price for the general area, right? Now, part of that, there are parts of Alpharetta that are far above, but this is factoring in not just single family, but also townhomes. And they're building quite a few townhomes in Alpharetta in that downtown Main Street area. So you're starting to see that shift a little bit. Now that's why you look at Milton and it's a lot higher. It's up quite a bit in Milton. Brookhaven's up a lot. You take a look at other places like Johns Creek, it's up quite a bit. Then you have more measured increases in some of these other locales. Where it's down, take a look at Cumming, for instance. Cumming is down quite a bit year over year, and Swanee is another location. And then Roswell. Now, these are very negligible differences, but when you take a look at it, take a look at Alpharetta, it was 1.2, it's up to 1.34. Cumming inversely, 1.29, and that's down to 1.2. So there's some shifts in the market. We're going to see this highlighted as we basically look at some of these other stats. So let's do that. So the next one, we're going to take a look at average pricing. So average pricing in Buckhead is down negligibly, but it's up in a lot of other places. So we talked about the median price being up in Brookhaven. Brookhaven is now right at that average of 1.6. Milton is up. Alpharetta is up. It's up in many spaces. Now where it's down, interesting that at the middle of the market, it was a much bigger drop. When you take a look at the average pricing incoming, it hasn't dropped quite as much. Some of the differences between averages and median. So I like to look at median because I like to see what's happening at the middle of the market, but looking at averages is still interesting because it shows us just how different and how some very expensive property selling can sway the data, especially when you don't have as many sales as you do in the overall market because there are less sales happening in $1 million plus segments. So let's move on. And average dollar per square foot. So every single month that I've done this luxury video, we've seen the price, the average dollar per square foot in Buckhead trend up. So again, this month it's trended up. This is year over year, of course. For the last couple of months, it's been trending up as well. So I wouldn't be surprised this time, probably early next year, that we're going to break that $500 barrier. But the average, as you can see over here, is right at $333 a square foot. And most of the metro is under that. It's just when you have places like Buckhead and in-town, even Decatur, you take a look at the real estate there, you're not going to have as many high dollar homes, but smaller homes are selling for quite a bit. The bread and butter for Decatur is going to be different than what you see in places like Alpharetta, Johns Creek, for instance. So that's interesting to look at. And now we're going to start talking about price cuts. And we're going to do a couple things. I'm going to show you percentages, then we're going to look at actual dollar amounts. We're going to start with counties, and then I'm going to show you a contrast between the top 10 highest zips in town, ITP, and also the top 10 in North Atlanta. So OTP, but OTP North, Northwest kind of. So let's take a look. Now I want to preface this and say that this isn't for properties that have sold. This is only for active listings. And across the board, at least a third of these active listings in most areas have had a price reduction. And it's one or more. And when you take a look at what the averages are, 6.2 is the average for Greater Atlanta. But when you take a look, it's a lot of them are at that 6.5, where price cuts have been a little bit less significant would be in DeKalb and over in Gwinnett. So 5.8, 5.6, but that's still significant, right? You list a house for $2 million and you drop it by almost 6%, and that's $120,000. So let's look at the actual numbers behind it. I think percentages are nice, but actual numbers are good too. So we're talking about DeKalb. So 104,000 is the average price cut right now in DeKalb County for $1 million plus homes. Are there houses that have smaller price cuts? Absolutely. Same thing that you'll have, bigger price cuts. You'll see significantly higher price cuts as well. So Fulton's a great example of that. It's such a big place, but when you contrast places like Buckhead, where you'll list something potentially for 10, 15, 20 million, when you're going to drop that price, are you necessarily just dropping it by 50 to 100,000? Well, the average is 156, but there are some cases where you'll see like $500,000, sometimes quite a bit more. Nonetheless, Fulton County is leading the charge there with the highest average price cut, but that's also because they list the highest dollar houses. Now, for Greater Atlanta as a whole, it's 134. So are there any surprises? I mean, six-figure cuts are not insignificant, but this has crept up. This is higher than what it's been over the last couple of months and certainly year over year. So let's drill down. I want to get more specific. So this here is inside the perimeter. So we're talking anything that's like City of Atlanta, Buckhead, DeKalb, Decatur, anything that's literally inside. So we'll take a look at some of these zip codes. So starting off from highest to lowest, we've got the Lindbergh, North Druid Hills area, and that's 30324. So 7.6% is the average price cut for the third of all listings, the 33.3 that have had a price reduction. Now, these are active listings, as I mentioned, and I think you should know there are zips that have a higher average price cut, but they have like one or two listings. So what I did is I limited the zips that had 10 or more active listings. Now, a bunch of these have way more than 10, but 10 was the minimum threshold to make the top 10 list. And really, it's a top 10 list, but the top 8 are going to be the most significant, because when you take a look here, the top 8 are 6% or more, and it goes down to 4.5 and 3.3, but it's a top 10 list. So we're looking at the top 10. So let's go through it real quick. So 30306, you're taking a look at Virginia Highlands. You're looking at Morningside, 7.1. When you look over here, look at that. That's nearly half of all the different listings in Midtown have had a price reduction, 6.9%. Over in that Buckhead, Sandy Springs area, 6.7% is the average cut, third of the listings. This over here is that Ponds corridor, Midtown, 4 out of 10, 6.7. And then you go to 30327, which basically is your West Paces Ferry corridor in Buckhead, and we're at 6.2. And 30305, Tuxedo Park, third of all listings, a little bit less than that. This is the lowest one on this list, 6.1%. 30326, you're looking at 40%. That's basically your Peachtree Road, Lenox area of Buckhead. And then 30318 is going to be West Midtown. So West Midtown there. And then we finish with, what is that, Inman Park? Yeah. So this is like Inman Park, Candler Park, parts of Druid Hills. So that's that general area. Any surprises? Let's look at what those actual numbers are. And then looking at the actual price cut numbers, these are the average price cuts. Well, I mentioned Tuxedo Park has some of the most expensive real estate. So obviously when the most expensive real estate has a price cut, the dollar amount is going to be reflected in that. These are bigger drops. So 220,000, Buckhead's going to have the biggest price drops across the board. When you look at it, 200,000 for that West Paces Ferry area. Sandy Springs meets Buckhead, 180,000. Now there are some on here that are 5 digits, not 6. Take a look here at 30308, and we're looking at that Ponce corridor. And then over here, you've got West Midtown and then Inman Park, etc. But those are also not as expensive, so they're not going to have to drop by quite as much. It's percentage based, but it's nice to see the numbers. Let me know in the comments if there were any surprises. So let's move north of the city. And when I'm talking about North Atlanta, we're going to talk basically about 75 to 85, everything that's in between north of 285. And so that includes parts of Cobb, like East Cobb, for instance, but not all of Cobb. We're going to use a portion of Gwinnett. So ultimately, it's more targeted. That's when I talk about North Atlanta moving forward, that's exactly what I mean. Take a look at some of these. So look at some of these double digits. We didn't have double digit average price cuts in town, but we do OTP North. Look at that. So 11.7, 11.1, and 10.1 for 30075, which is Roswell. 30028, which is Cumming, and then 30107, which is Ball Ground up in Cherokee County. So interesting to note though, this is 15% of all active listings. Take a look at all of the homes for sale in Roswell. Only 1 out of 6 or 1 out of 7 have had a price cut, but when they've had a price cut, it's been more significant. The average price cut is a lot higher, but there aren't as many listings in Roswell that are having price cuts. That's basically what that means. So in Cumming, it's a third practically of all listings, and that's driven by a lot of new construction. There's a lot of new construction inventory in Forsyth County, and in Cumming, that's contributing to this. That's why you're seeing the median and average prices come down as well. So 11.1, that's big. So if you want to live up that corridor, there's some nice deals. 30107 is Ball Ground. So up in Cherokee County, it's a tiny little town. It's one street. It's a cute street. It's really nice. If you haven't been, right off of 575. It's not too long to get into that little downtown area. When you look around there, they're building some beautiful houses, some big neighborhoods. Berkshire Homes has Malone's Pond. I've featured a couple of those houses on this channel. Up on the ridge, they're building $1.5 to $2 million houses. There's a lot being built in Ball Ground, but I guess it's not selling as quickly as they would like, and you have some pretty significant inventory, and half of that inventory, practically a little bit more than 4 out of 10, have seen price reductions of at least 10%. That's not insignificant. Moving on, 30506, you're looking at practically 10%. And what is that? Well, that's that Lake Lanier North Cumming area. Taking a look at 30517, 8.5% is not insignificant. Now that's far. I just said that this would be 75 to 85, and this zip snuck in because that's Brazelton. Like that's far. We're not going to talk about that area most likely in future luxury videos, but it made the list this month. So congratulations, you snuck in. 30067, that is East Cobb. So 8.1, 4 out of 10 listings have had significant price reductions. This is Vinings, 30339, and Smyrna Vinings, mostly Vinings. 1 out of 3, 7.8. This over here is Johns Creek, Alpharetta. And these numbers are going to be less. So a little bit less than a third of the inventory. You're really inching towards that 1 out of 4 instead of 1 out of 3, 7.4. This is Kenton, almost 1 out of 4, 7.3. And then see how the top 10 list is well over that 6% range, whereas for in-town, it dipped into 4.5 and 3.3. Here, the lowest one on the list, if you take away Brazelton, it's still like 6.9% is rounding out the top 10. And that is over in Johns Creek, Alpharetta, mostly Alpharetta, but parts of Johns Creek. Any surprises? Let's look at what these actual dollar numbers were. So when we looked at Buckhead, there were some really impressive numbers. Do these surprise you? Look at that. So in Tuxedo Park, of all places, where some of the most expensive real estate in all of Atlanta can be found, the average price cut is $220,000. In Roswell, where we saw 1 out of 8 of price cuts, it's $400,000. So how is that possible? Sample sizes. So I mentioned, and there are still a decent amount of properties for sale in 30075, but when someone, let's say, grossly overprices their property and then has a major correction on a smaller number of properties, it's going to have a bigger impact. So that's kind of what we're seeing there. So when you take a look at this number here, the 300,000, that's for 30067. It's Marietta. It's that Soap Creek meets Paper Mill, Woodlawn area. Basically, Atlanta Country Club is in there. There's a whole bunch of high dollar real estate along Paper Mill. And then 30067, there's a lot of infill new construction. So a lot of four-side brick homes were knocked down, and these beautiful estate properties were built. And sometimes, I mean, they're pricing them at 3 to 4 million. And when they're on the Walton side, a lot of them sell for that. On the Wheeler side, it's hit or miss. So that is not as surprising as this Roswell number, but I think when you start to understand just the sampling, there are more of these properties here in this portion of East Cobb than in 30075. This is offsetting and skewing the data quite a bit more. But it's interesting to look at because a lot of these other zips, the numbers are higher than Buckhead, right? You take a look at 30107 in Ball Ground, that's higher than Tuxedo Park. Now, where we do have 5 digits, the lowest one on this list is here in Canton. So any surprises? I know some of these did surprise me. Let me know in the comments. Let's keep moving on. So next up, we're going to look at inventory. So we're starting to see some of these numbers dip. So, okay, for most of the year, the number of new listings coming to market every month was higher than last year. So black is last year, gold is this year. Now there's a little bit of an inflection point here and a divergence, right? So you're seeing this underneath. So it'll be interesting to see. I mean, I think that over the next couple of months, it's going to do this, and we're going to end up with less new houses coming to market to finish this year than we did last year. So that'll be interesting to see. So when we break this down by city, you're going to see that listings coming to market in the month of August are up in just 3 localities. So Brookhaven, Decatur, and then Suwanee a little bit. Everything else is down. When you look at Alpharetta, look at that. That's a 50% drop in the amount of new listings coming to market year over year. So that's interesting. Now let's look at how the active inventory is. So active inventory, I mentioned earlier, it's been quite a bit higher. New properties coming to market every single month is higher than what it was last year. Now, this is active inventory. So this is the amount of homes that are actually for sale. So it also is higher, but this line is starting to trend down, whereas this one here is kind of flat. So this is going to get a little bit closer to where we were last year. Is it going to end up dipping under? I don't think so. I think what's going to happen here is that it's going to kind of do this thing, and it's going to follow the same kind of trajectory. We're going to finish the year with more active $1 million plus houses in the market this year than there were last year. So let's break that down and see what they look like, because when you look at Alpharetta, the number of active listings are up. So the number of new listings coming to market are half in Alpharetta, but active listings are up year over year. So that's, coming also. Active listings are up quite a bit. We've talked about some of the reasons why with inventory and just building a lot of new houses out that way. So I don't see any other surprises. There's nothing really other super noteworthy to mention here. So let's move on and take a look at the pendings. Now this is interesting because pendings have been trending up, and you see we're about to cross over and have more pendings, I think, in the month of September. This is August data, so like September data in a couple days once I redo this video. I think we'll see that crossover. So it's a sign of more properties going under contract, which is really great. Let's look at how that breaks down in the actual unit numbers. So this is huge. So in Alpharetta, year over year, half as many properties are going under contract. So that's interesting because you have half as many properties coming to market as you did a year earlier in Alpharetta. Active inventory is up. And one of the reasons why active inventory is up is because there's less going under contract to take those actives off the market. Now, we also saw that active inventory was up quite a bit for coming in spite of new inventory being down, but this is a smaller drop. Now, where we're seeing some positive movement is in town. So this is part of what's carrying that. Buckhead's down significantly too. but in town is up quite a bit. Roswell's up quite a bit. Brookhaven's up. Marietta and East Cobb are up. Suwannee's up as well. So overall, Milton as well, right? So overall, we're seeing more pendings. We're at that crest. It's going to cross over. I'm really excited to look at this data. If you're still watching this video, because I know these are long, I am going to be creating 4 different kind of stat videos moving forward every single month. So we're going to cover the general market, we're going to cover the luxury market, and then I'm going to do one specifically for North Atlanta and one specifically for in-town Atlanta, Buckhead, the in-town neighborhoods, that kind of stuff. So that is coming to this channel in the next really 2 weeks. We're almost there. And I'm going to try and front load the month with a lot of stats because that's when the data is freshest. So if you like stats, that's coming. Okay. So let's see here. So let's look at closings. So closings, we're following where we were last year at this point. So it started to cross over in June, and it's been lockstep ever since. So we'll see where that goes over the next couple of months, how that breaks down by city. So closings are also down in Alpharetta. So that helps to explain why that active inventory is so high. There's less going under contract, less closing. Those properties, if they stay in the market and they aren't withdrawn, well, they're going to fall under this active. So closings are up in town. So more people are preferring to live in the actual city than maybe the suburbs. I mean, that's part of what the story tells. And then there's really not any other major surprises. I think this is a little surprising that there was only one closing this past month for an area as big as Suwanee. Next, let's take a look at the failures. So expireds and withdrawn. So this is surprising. There wasn't a single failed listing in Sandy Springs this past month. So Sandy Springs had its challenges. We talked about Sandy Springs having less overall volume year over year. It's down approximately half. But it's it's just less people choosing to sell their homes in Sandy Springs. And the listings that have gone to market, well, none have failed so far. So that's interesting. Take a look everywhere else, and there's some areas where they're down. So in town, we saw there's a correlation here. When you see the number of closings go up and the number of pendings go up, you're going to see the number of failed listings go down. And we can see here that in town's down. And then Milton, they're up. Cumming, they're up. I mean, we talked about Cumming. That's an area that just is struggling with the total number of inventory. Marietta, East Cobb's up quite a bit. A lot of failed listings out that way. Roswell's up quite a bit. This here continues to be Governor's Town Club down in Buckhead. So no major surprises, I would say. Now take a look at the ratio of failed listings to active listings. And there's some numbers on the screen that really are mind-boggling, eye-opening and mind-boggling. So East Cobb, over half of all active listings are failing. 1 out of 2. More than 1 out of 2, 56.8%. That's really, really high. When you look at the rest of the metro, in some places it's 1 out of 3. And then it goes to 1 out of 4. And then it goes down in some other areas. Like this is a little bit less than 1 out of 5. And you're at 1 out of 6, 1 out of 7. You know, so it's interesting. I think Alpharetta is interesting because we just saw earlier in the video when we were looking at the number of new listings coming to market, the high number of active listings, the pendings being down significantly. Normally when pendings are down significantly and closings are down significantly, the rate of failed listings are up significantly. Now, unit-wise, it is above the baseline for the metro. You know, you're seeing that it's above that for Alpharetta. It's 29. But when you take a look at the number of failed to active listings, it's like 13.7%. It's like 1 out of 7. So East Cobb is over 1 out of 2. Alpharetta is 1 out of 7. So the listings are generally more successful in Alpharetta, even though pendings and closings are down. Okay, moving on. Now this next chart should be familiar. It's the ratio of active listings over the number of closings. Now this gap keeps getting wider and wider. So here's what I'm talking about. When you look at this, it looks like it's trending down. And why is this important? Because If there are more and more active listings and less closing, then you end up with a bunch of extra inventory that puts pressure on everybody's pricing. And for buyers, this is great because you have a lot of choices in the market. And it also means that for a seller to sell sooner, because buyers have so many choices, it kind of forces them to get more competitive on pricing, which is why we're seeing so many price cuts. So for buyers, this is great. For sellers, you don't want to see this. So it depends on what side of the transaction you're on. But if you go back to January of 2022, this ratio here was 3.5 to 1. So there were 3.5 active listings for every closings. You go back to this point in the regular market and it was 1 to 1. So the luxury market's always been a little bit of a gap, but this gap is widening. So if you look at June data, it was 4.75 to 1. So that's a big swing up. If you look at July data, it was 5.69 to 1. So that's a full extra percent up. And then this month, it's 6.66 to 1. That's just 2,000 over 300, right? Don't read too much into what that is, whatever. But nonetheless, you're looking at this is almost a full point up, full point up. So what does this look like for next month? Is it going to be 7.5 to 1? So this doesn't look like it's trending in the right direction because 7.5 and then the month, like there's some seasonality to it. You see the ebbs and flows here as you get into that later part of the season. But here's some perspective. If you go back to January 1st of 2012, that's the earliest data we have access to. Unfortunately, I wish I could go back a lot earlier because I'd like to be able to look at what happened in 07, 08, 09, and that way we can draw some inferences with where things are going to decide, are we potentially headed towards another crash, right? But here's some perspective. This is nothing in the luxury market compared to what we saw back in 2012. 6.66 and potentially next month 7.5 to 1. Well, before I answer, in the comments, what do you think that ratio was when the market was at its worst? The luxury market got hit so hard back then. It's not 11.1 like it was in the regular market. I'll tell you that right now. Okay. It was 42 to 1. So there were 42 listings to every closing. In the month of January that year, there were 926 active listings over $1 million. Now that says a lot as well because our market has appreciated so much since 2012. 2012 was really the bottom of pricing. So the fact that we had 926 properties on the market that were over $1 million is interesting unto itself, but there were only 22 closings. So this month we had 300 closings, so it's a different market. This ratio, it's not great that this is starting to separate. It is great if you're a buyer. Absolutely. It's fantastic. It's giving you more options than you've had in recent years. And you're starting to see pockets within Metro Atlanta where buying starts to make a lot of sense. Like there are properties that are just ripe for not necessarily lowballing, but lowballing, getting more aggressive with the offers that you're making and having sellers actually consider those offers. I'm not advocating for coming in at 50, 60, 70, 80% of the asking price. We're going to look at what stuff actually sold for here in just a couple minutes. You look at the list to sales ratio, but that'll help to guide what others have been successfully purchasing these properties for, what kind of discounts they're getting. But this is interesting. I'd keep an eye on it. It's great news for buyers. For sellers, you don't want to see this gap get bigger. Buyers, you absolutely do. So let's look at the ratio of pendings versus closings. So here I mentioned that pendings were up and closings are ticking down. Last month we had 366. And when you take a look at it now, well, there are 324 pendings over 300 closings. So pendings have now surpassed closings. When else have we seen that? Well, we've seen pendings surpass closings earlier this year. And as we got into spring market, it recalibrated the other way. So every once in a while, pendings will be above that. If you go back this time last year, back in August, September, we got into a point where pendings were a little bit higher. So this here is basically this. So is it going to kind of do the same thing? I don't know. We'll find out. That's what the beauty of these videos are. We get to go back and look at the stats and see what the market did and try and project where it's going to go. But I think that we're going to continue to see, I think we're going to have a strong fall. I think with rates being generally more attractive than they were this time last year, you're going to have more pendings and more sales because of it. So it'll be interesting to watch. Okay, showing activity by area. So again, Alpharetta with a whole bunch of mixed signals, less pendings, less closings, less new properties coming to market, higher actives, but less failures. The Alpharetta has bar none more showings than anywhere else in the metro in the $1 million plus market, and it's up year over year. So a bunch of people are looking at houses in Alpharetta, but they're just not buying them. So that's interesting. Why do you think that is? Let me know your thoughts. So in town is up significantly. So we saw closings up and pendings were up also in town. So it's normal that another indicator of pendings and showings is the amount of showing activity. So this goes hand in hand. Look at Marietta, look at East Cobb, big increases. Everywhere else, there's really only Ackworth and I guess parts of Buckhead when you look at that. This also is because there are less listings in Buckhead. This is a marginal drop, but there was a decent number of less listings. So this is, I'm not worried about this. This here, there were only 40 total. There are a lot of houses on the market in Governor's Town Club. And for all of those homes in the entire month of August, there were only 40 showings. That's alarming. So everywhere else, year over year, I mean, there's exceptions to that, like Cumming is marginal, right? But everywhere else, you're seeing upswings. So more people looking at houses, or buyers are wanting to look at more houses before making a decision. They don't feel pressed for time. We're about to get into that right now when we look at days on market and months of inventory. So what this all means is that buyers are taking their time. They're looking at more properties this year than they were last. And if I had included 2023 data, it's a big jump up. Like there's no rush to go and look at a property in most of the metro right now. There are pockets, as we've seen, where if you do that, chances are you're going to miss out. And we're about to get into days on market and months of inventory. And that's how you're going to know that you're going to miss out if you look at too many houses before you select one and make an offer. But it's not like it was a couple years ago where you would look at less than a handful and you were making offers. And if you didn't, you were missing out on those properties. Now, well, let's look at it. Let me show you exactly what I'm talking about. So showings per listing before we get into days on market, look at how hot Johns Creek is. So every listing that's coming to market above $1 million is getting on average about 7.8. Is that what that works out to be? Yeah, 7.8 showings. Now it's down from last year, but 7.8 still leads the whole field when you look at it. This is Governor's Town Club. I mean, it's just, that's one part of, and I have a ton of home tours that were filmed in Governors. It's a beautiful neighborhood, but no one's really, not a ton of sales happening out in Governor's Town Club right now. But showings per listing are down in half of the field and up in some of the others. So down significantly when you look at Suwannee and Duluth. They're down in East Cobb, Marietta, down in Cumming and Milton and Alpharetta and Roswell. Up slightly, Sandy Springs, Decatur, Brookhaven. So this is just falling in line with what we've talked about in previous videos. So Johns Creek continues to defy the rest of the luxury market. It's hot. There aren't enough properties when they come to market. If you're selling a house in Johns Creek and you position it well with the right pricing, it's in the right condition, you're going to get a ton of activity. This is what this is telling us. Now we're going to look at days on market two ways. We're going to look at median, which is middle of the market, and then we're going to look at average. So when we take a look at this, we're taking a look at middle of the market for Ackworth. This is Governor's Town Club, 66 days. That's up. Canton is up significantly. Milton is up significantly. You're looking at 38 days. And this is, I think, 44 days is the median. Woodstock's up a little bit. Johns Creek is going to have some of the lowest median days on market. So people are, I've mentioned it, if you're selling a home in Johns Creek, congratulations. If you price it appropriately, like you could afford to test the market a little bit in Johns Creek and not get hurt by it. If you do that in Governors, you're toast. Cumming, look at that. That's a big jump up, right? So big jump up in Cumming. Roswell, big jump up. In town's the same. Buckhead's down a little bit. Overall, in the metro, you're looking at 23 days is the median days on average to attract a buyer. Let's look at what that looks like for average. So averages are always higher. Can you believe that in Ackworth, it's almost 100 days? So here's the thing. This is driven predominantly by Governor's Town Club. There are some other pockets where you'll have, like historic Ackworth may have a couple, but the majority of the properties that are driving this data is Governor's Town Club. So if you want to live in a country club like Governor's Town Club, you should be making very aggressive offers. And if you're selling a home in there right now, if you're not priced appropriately, you're going to be on the market for a very, very long time. So keep that in mind. That's 100 days on average before attracting a buyer. And it's 1.6 showings per listing. So if you have had one or two showings and you haven't had the offer, market's telling you that you're overpriced. So keep that in mind. Okay. Johns Creek is up, but it's still the lowest average days on market. When we take a look at that, what does that work out to be? That is 38 days on average. So even in places where things are moving, 38 days on average is not insignificant, right? But Johns Creek is still very hot. So let's look at what kind of a market we're in these given areas. And we're going to look at months of supply for that. So the red line, the dotted line is 6 months of inventory or more. That's where you cross into a buyer's market. The shaded area is a balance market between 5 and 6 months. So I mentioned it, but you've got 10 months of inventory in Ackworth. Make those aggressive offers. And some of the other areas where we've crossed into buyer market territory, well, you've got Forsyth County coming. So other places we've been, when you look at Woodstock, for instance, but it's down. Canton is up marginally, but year over year, both of those cities in Cherokee have been in buyer markets. Buckhead was trending that way last year. We've seen this in the last couple of videos, and now it's down. We're actually back into sellers, very like by a hair, back into seller's market. So I would still call that balance. It's practically touching 5 months of inventory. So where it's moving very quickly, we just mentioned Johns Creek. So this is a very, very strong seller's market at 2.7 months of inventory. Other strong seller markets, believe it or not, Decatur, it's not the most luxurious place. You do have some very beautiful properties that'll sell in Decatur, but you're looking on average at 1.5 to 2. And those tend to move well, 3.1 months of inventory. So Brookhaven's at 4 months. You're up in some other areas. Suwannee is now into a balanced market. Buckhead, I mentioned, retreated. The greater Atlanta area has trended into balance. And when you take a look at Alpharetta and Milton, they're now in balance as well. But they're also, when you look at Cumming and Ackworth and Cherokee County, those are really driving those overall stats. So when you take a look at this, there are definitely other areas where you're getting better deals on houses this year compared to last. So some of them in Cumming, we mentioned that, last year was 96.4. This year you're at 94.2. You're getting almost a 6% discount on average in Cumming. In Marietta this time last year was 99.5, almost full asking price. This year they're selling for almost 3.5% on average less than what their original ask price was. Very few areas they're up. So when you take a look at them, you're looking at Sandy Springs. So 95.6 last year, it's up to 96. It's a marginal increase. And then over here in Buckhead, so 95.8 last year, and we're up to 96.2. And then, of course, in town. So in town is like a 0.1% increase. But you can see, generally speaking, you're getting less than the asking price everywhere. But generally speaking, you're getting deals on properties. But does that mean that no properties are selling for above asking? That's a great question to ask, and I've got that right here. So this is the percentage of sellers who got their price. We're going to look at 3 years worth of trends. So let's start with above. So 2 years ago, 30% of all the listings above $1 million were selling for higher than what their original ask price was. Last year that dropped to 17. This year we're down to 15. So that's still 1 out of 6, 1 out of 7 houses that are still selling for above the asking price. So that means that there are multiple offer scenarios in some parts of town. Real estate's very hyper local. It depends on the area. You can also take the worst performing area, price the property really, really well, get a bunch of attention and attract multiple offers. So it's not just because an area might be doing not as well as some of the others doesn't mean that you're not going to see multiple offers. It really depends on that specific homeowner and how they choose to price their property. Now, full price, we're at 16. It's basically the same. This is what's interesting. So 2 years ago, roughly 1 out of 2 properties were selling for less. Now we're up to 7 out of 10. So there are definitely deals to be had. Now we're also seeing sellers paying more in terms of concessions. So not only are they coming down in price, but the percentage of sellers who are paying closing costs are up as well. So the percentage who did not pay closing costs went from 60% down to 50% over a 2-year period. And basically the inverse of that, it's basically you're looking at a mirror image. But right now, half of all sellers are paying concessions. Now, of the 50% of sellers who are paying closing costs, they are paying an average of $13,100 in concessions. So that's up significantly. Last year it was $10,007. The year before it was just $5,000. So in 2 short years, it's what is that? Almost 2.5, almost 3, not quite 3. It's 2.5 times more in terms of concessions. So as a buyer, when you're looking at this, if you're interested in living in some of these areas that have some of the biggest price drops, some of the lowest sales to list ratios, right? All of that kind of stuff, you now have an opportunity that you didn't have a couple years ago, and you have the opportunity to make more aggressive offers. So you should be getting better deals. And if you're a seller, all this to say, better price your property right. Otherwise, you're going to be sitting on the market a little while, unless you're in Johns Creek. Now, as always, if you want access to these slides, I'm putting the link to them in the description and in that first comment. It's always free. Feel free to request them and I will send them to you. If you're going to watch more videos today, maybe check out the overall Atlanta housing market video and see what's happening for Metro Atlanta as a whole if you haven't already seen that one. Thank you so much for watching and hope to see you on the next one.